Well, hello everyone. Joel Fuessel here with Secured First Financial of Texas. Today I'm going to talk about the pros and cons of owning an annuity. I have people ask, is an annuity good for me? Because I've heard different things. I've heard good things about annuities. I've heard bad things about annuities. Which one's true? And is it good for me? My answer always is it's based upon what your needs are. So let's find out what your needs are, and then I can make a recommendation if an annuity is a good thing for you or if it's not a good thing for you. And so I'm going to talk about today the pros and cons of having an annuity. I'm also going to have a reference at the end here. I'll put a link in the description for a couple articles that you can reference that I think also do a really good job of laying out the pros and cons to owning an annuity. So let's talk about the cons first. Okay, why would you not want to own an annuity? Well, I'm going to list them out here. Okay, number one, if you need liquid, okay, liquid money, not a good place for an annuity. If you're an aggressive when it comes to risk tolerance, it's not good to have an annuity. If you're needing money for an emergency, an annuity is going to have your money tied up, not good. If you need to pull out all the money prior to the period of time that the money has to be in that annuity, then you're going to incur a surrender charge, and that's not a good situation for you. Also, if you have a bad agent, that can be really bad as well. And so let's talk about these things in more detail. Okay, so what do I mean by liquidity? Well, if you need, let's say you have something you need to purchase, a big purchase, or you do have an emergency. Well, when you put your money into that annuity, that money is going to be tied up for a period of time. Depending on the type of annuity, you're going to have some options like fixed annuities, which like are known as MIGA multi-year guaranteed annuities. Typically, they can be anywhere from 2, 3, 4, 5, 7, 10, even 14 years. Indexed annuities are 5, 7, and 10. Some of them will go up to 14 as well. And so, depending on that term that you have your money put into that annuity, if you take out money prior to that term, or if you pull it all out, you're going to incur a surrender charge. If you pull out a portion of it higher than what a lot of companies will offer, is what they call a free withdrawal charge, or excuse me, free withdrawals. And a lot of them will offer 10%. Now, there's some that will offer less, there's some that will offer more, but most of them will offer 10% free withdrawal starting in year two. Some annuities don't have that as an option, but they might offer a rider charge that you pay a fee to have access to a portion of that money. So anything above that 10%, you're going to incur a charge. So, if you're needing liquidity, that may not be a good place for you to put your money in an annuity. A side thought is if you like the idea of an annuity, but you're short on those emergency funds. And what insurance companies like to see, because of there's some rules and regulation that has to be followed, it's called suitability. And so they typically like to see at least 6 months of emergency funds. So, basically, if you lost your job, they would want to see that you have at least enough money to pay your bills for a 6 month period. Um, and then if you at least have that, then of course you could put the difference in the annuity if you chose to. Otherwise, if you're needing liquidity, you need access to it, it may not be a good fit. If you are someone that is aggressive when it comes to their risk tolerance, so you're okay with lots of risk, an annuity is considered a conservative, in some cases, maybe a moderate type of risk tolerance. If you're somebody that's aggressive, this is not going to be a good fit for you. The other thing is, I think a lot of times it can also, an annuity, if you have a bad agent, and what do I mean by a bad agent? Well, someone that doesn't really know what they're talking about, someone that's very pushy, that's just trying to get you to put your money into that annuity. Um, they could be someone that's just looking to get paid. And so if you're reading that, if you're feeling that this person is really pushy on this, they're pushing me towards this, get away, run from them, back up out of the situation. Do not do it. Take your time. Trust your gut. You're getting a bad feeling. Do not go with them, because agents can make the whole situation terrible. There's great agents out there. There's also some bad agents out there. So my thing would be is anytime you're working with somebody, number one, check out their credentials. Okay. Find out how long they've been doing this for. Find out, if they have any references, or if they have any reviews. Look at their reviews. That's going to be really important, because if you're seeing some things on the reviews that are indicating something bad, stay away. If you're seeing good things, if you're feeling good things about them, you're not feeling pressure, they're probably somebody good to work with. If not, get away from them. So let's talk about the pros now. Okay, what are the pros to owning an annuity? Well, I'm just going to list out a few things here. Uh, Principal protection, potential to accumulate interest, income for life, no fees on a lot of the annuities, and a good agent. Okay, so let's talk about principal protection. So again, there's different types of annuities. So I mainly focus on fixed and indexed annuities. That's what I'm licensed to offer. So when it comes to fixed annuities, a lot of people compare those to like a CD. Typically, they make a little bit more interest than a CD. Um, but they're going to have, most people look at, shorter terms, 2, 3, 4, 5 year terms. They do have ones that go longer than that as well. And of course, that's you get a fixed guaranteed rate of return for that term period that you have that money in there. Okay, so those are some pros. If you're looking for a fixed return, that's a great place. Also, if it's, let's say it's an indexed annuity, well, an indexed annuity has things called principal protection. So that means, like for example, when you have people have money in the market, the money can go up or down in their retirement accounts. Well, with principal protection, if the stock market was to go down, okay, then your money is protected. You don't lose a thing. Your principal is guaranteed. When the market goes up, the insurance company will offer different indexes that you can track. And they just, they say, hey, here's your options. And then a lot of times what insurance companies will do is they will say, hey, on this particular index, we're going to have a cap. You can't make anything over this. Or, hey, this particular index, we're not going to have a cap. We're going to pay out a participation rate. Or, hey, we might do a spread that if it goes up X amount, we may take off a few percentage. And so the reason why companies do that is, they can pay out interest. So you have an opportunity of accumulating interest. So they're saying, hey, this is what we can pay out. So we're going to put these certain limitations on those, so that way they can make sure they're able to pay those. And so, the pro is you have the protection. Con is in some cases you may be limited on the upside. And so, but you have the opportunity to accumulate interest. The other thing that people really like about annuities is, this is one of the only places that I know that you can do this, is you can create an income for life. So let's just say that you retire and you want to put your money into an annuity to where you can have that income for life that's guaranteed as long as you live, that money still continue to come to you. Annuities are one of the only vehicles out there that you can do that. And so if you want to take an immediate income, or if you want to wait some years, defer it, and then take an income, you can do that. So most of the time, most companies that offer these will offer there's a charge to get that basically guaranteed income the rest of your life. There are a few of them out there right now that also have it where they don't have any type of fee. Okay. If you're just looking to put money into, you say, hey, you know what? I'm a type of person that I don't like the risk. I'm very conservative. I work really hard for my money. I don't want to lose it when the market goes down. An index annuity can be a great place for accumulation. And there's some articles out there I was talking about before. There's a really good one by Forbes that came out a couple years ago that talks about, if you want a reasonable rate of return, an indexed annuity is a really good place to put your money. And so I think it's a very, if you read through the article, they'll list the pros and cons, but I think they have a lot of good points to them. And then the last thing I want to talk about is, the last thing when it comes to pros is a good agent. Okay, the good agent can make and break this. So I have read times before where somebody had wrote a review and complained about, a company or a situation, and when I read that, I'm like, okay, I can see it. You can understand they don't understand what they have, or you can understand that they don't understand the process of how you pull money out or how you file a claim. So a good agent's going to know how to, when the time comes, if you want to take a withdrawal, from your annuity, okay, or if you want to turn on where you're just receiving, you want to live off the interest and just get the interest only payments, you can do that. Or if you're ready to take an income for life, where that income will last as long as you're alive, reach out to your agent. Okay, your agent can help you through the paperwork, make it a seamless process. It makes a huge difference when you have a good agent. Another thing is, your agent is going to make a huge difference to your family whenever you do pass. And let's say that you have money left behind in that annuity, that agent is going to be able to help file that claim with your family members to be able to get that money to them. Now, of course, if there's ever been a situation where, a beneficiary was not put on there, or let's say the beneficiary died, And then that is a different situation. That's going to become a court situation, because on the annuity, there has to be a beneficiary. And on that annuity, whoever is listed as a beneficiary, that is where that money goes. If that beneficiary has passed away and that beneficiary has not been updated by the owner of the annuity policy, then the court will decide at that point. So that's where it can get kind of sticky. So you want to make sure that you're updating your beneficiaries. Again, a good agent will definitely help you out with, making sure that your beneficiaries are updated. But I'm telling you, on the process of filing that claim, a process of getting those withdrawals, a good agent is going to make huge difference on how you like your annuity. So with that being said, the last two things I want to reference is there's a couple good articles out there. There's one of them I talked about earlier from Forbes. I'm going to put in the description. There's another one by Keplinger. I cannot say it today. Keplinger, which is another one I thought was, it's they're very here's the pros and cons. If you like these things, annuity is good. If you don't like this, annuity is not good for you. I think they really lay it out. They do a good job of laying out. So I'm going to put those there so you can reference. But if you do have any annuity questions or had situations you're not sure about for an annuity, or like to talk to an expert about an annuity, feel free to reach out to me. You can comment and we can set up maybe a private chat where we can talk in more detail.